Mike Allison, in the first half year, both order intake and net sales were more than 30% lower. A result you probably won't be completely happy with.
Yeah, I think we delivered a solid set of results. This is a cyclical downturn in semiconductors, but I think we're doing everything we can to optimize the business during this period. I'm not satisfied. I think we can do better, and we're certainly focused in the second half of delivering even stronger results.
In a statement earlier today, you mentioned that this cyclical market downturn showed first signs of easing. Can you elaborate on that a bit?
Yeah, well, this is my 8th or 9th cycle in semiconductors, and clearly we're at the bottom of the cycle, as you can see with our book-to-bill ratio and the more stable environment. In talking to people around the world, our key customers, the business is improving gradually for them, and gradually in the memory market we're seeing stabilization of prices, and that typically means that capacity will come back, especially in the leading applications like smartphones and data centers, and that leads us to believe in 2020 we'll see a more positive CapEx environment.
The first half of the year is over, you present the results, but now in July the second part already started, the second half of the year. Can you already say how you started into this second semester?
Yeah, we gave a guidance for the third quarter of between 130 and 140 million, which is higher than the guidance we've provided for the second quarter. We've seen a positive start, and I think we're pretty confident in these numbers. Visibility in semiconductors is still a little bit low. I think we're hoping we'll see some upside in the fourth quarter, but it's a little bit early to tell that. I think by the end of the third quarter we should have a much better view on that.
If we have a look at your outlook for the full year, you also mentioned the visibility is not very high. It's not very detailed. You speak of expected lower net sales and profit. Can you say anything about the EBITDA margin you expect?
Yeah, our CFO in the presentation today mentioned that we will see an improving EBITDA performance in the second half. I also mentioned that in this downturn we're taking a lot of action on cost, improving our supply chain, improving the efficiency of the business, and we expect to see some of these savings come in the second half. Also, we have a very high leverage on additional revenue, because we don't have to add much fixed cost with additional revenues. So a little bit of revenue plus a little bit lower cost should allow us to improve our EBITDA in the second half of 2019.
In general, we observe a limited visibility of the future market developments, especially in the semiconductor industry. How would you describe the current situation specifically in that sector?
Yeah, semiconductor is our largest sector, and it's where VAT have a very strong market position. We're continuing to gain share in that business, as I showed you today. In a cyclical business, the reason it's cyclical is you have a lot of end markets that are growing very fast, and you tend to get stop-go buying behavior in things like servers, the smartphones, also looking at things like the Internet of Things. A lot of things happening there on machine-to-machine communications, and these are high growth, but it means you've got a highly fluctuating CapEx environment and chip demand environment, so that still gives you cyclicality. The good thing is semiconductors are growing everywhere, and we really haven't changed our view on the long-term viability of a semiconductor business, that will continue to see growth in CapEx around semiconductor, and with our growth in market share, that gives VAT, I think, a tremendous opportunity to grow over the next 10 years.
What do all these developments mean for the dividend payout for the end of the year? Do you expect the 4 francs per stock to remain?
Yeah, I think you've seen with our free cash flow number for the first half that we're very focused on that topic. We recognize, and it's our financial model, to have a strong dividend performance for our investors, and it's our full intention to provide a dividend in that level for the full year.